Las Vegas, the Bellagio Casino Resort, August 13th, 2019, 2:15 a.m. In the sterile fluorescent light of the accounting office, senior auditor Janet Morrison stares at ledgers that don't add up. High roller suite bills from the previous weekend lie scattered across her desk. Receipts for champagne dinners that cost more than most people's cars, private dining experiences that rival royal banquets, and buffet tabs that seem impossibly inflated even by Las Vegas standards. Something is wrong with the numbers. The buffet receipts consistently show totals that don't match kitchen inventory reports or staffing costs. For 3 years, the casino's most exclusive dining operation has been generating revenue that seems too good to be true. And in Las Vegas, when something seems too good to be true, it usually means someone is stealing. A buffet cashier, invisible to the casino's endless chaos of slot machines and gaming tables, has just completed one of the most intricate thefts in gaming history, systematically skimming $11.7 million from VIP dining tabs through patient manipulation of an accounting system that trusted him completely. He wasn't a pit boss with access to gaming tables where millions changed hands hourly. He wasn't a dealer handling chips worth more than houses. He wasn't a cage clerk processing massive cash transactions. He worked the buffet line, taking orders for lobster and prime rib, while quietly rewriting the financial records that tracked every meal served to the casino's wealthiest customers. Before we dive into how an invisible employee turned fine dining into the perfect crime, make sure to hit that subscribe button and drop a like if you're already fascinated by this incredible story. Comment below and let me know where you're watching from. I love connecting with true crime fans around the world. And if this video is eligible, don't forget to hype it. Your hype gives this channel a real boost and helps more people discover these heist documentaries. Luis Ortega embodied the paradox of Las Vegas service work, simultaneously essential and invisible, trusted with access to extraordinary wealth while living modestly in America's playground for the rich. At 44, he had spent over 2 decades perfecting the art of professional service while remaining completely forgettable to the people whose extravagant lifestyle he enabled daily. Born in Phoenix to parents who had immigrated from Guadalajara, Luis grew up understanding that hard work and reliability were the foundations of economic survival in America. His path to Las Vegas began in restaurant kitchens throughout Arizona, where he learned the demanding pace of commercial food service and developed the customer relations skills that would eventually make him invaluable to casino hospitality. Operations. The Bellagio hired Luis in 1997 based on recommendations from previous employers who praised his punctuality, attention to detail, and ability to handle demanding customers with grace under pressure. His position as a buffet cashier represented steady employment with benefits, a significant achievement for someone whose formal education consisted of a high school diploma and various hospitality certificates earned through community college. Programs. Luis's daily routine began at 6 a.m. and extended through the afternoon shift, covering the peak dining periods when Las Vegas's wealthiest visitors expected flawless service regardless of their demands or behavior. While other employees served the general casino population, Luis specialized in VIP buffet service, the exclusive realm where oil executives, tech billionaires, and entertainment industry moguls treated $1,000 meals as routine business. Expenses. His modest apartment in a complex 15 minutes from the Strip reflected the financial reality of service work in an expensive city. The rent consumed nearly half his monthly income, utilities and transportation took another quarter, and the remainder supported basic living expenses and regular money transfers to family members in Mexico. There was nothing in Luis's lifestyle that suggested wealth or extravagant spending. No luxury car, no expensive electronics, no evidence of gambling or other vices common among casino employees. But Luis's position provided him with extraordinary access to the financial systems that tracked millions in VIP dining expenses. Every day, he processed transactions for customers who spent more on single meals than he earned in months. He watched tech entrepreneurs order champagne that cost more than his monthly rent and witnessed pharmaceutical executives tip servers with amounts that exceeded his weekly salary. The psychological impact of this proximity to extreme wealth while living paycheck to paycheck was profound but carefully concealed. Luis maintained perfect professional demeanor and provided exceptional service, But 22 years of watching people casually waste more money than he would ever possess had created a reservoir of resentment that simmered beneath his polite exterior. His colleagues viewed Luis as the ideal employee, reliable, experienced, and completely trustworthy with financial transactions involving the casino's most valuable customers. Management appreciated his perfect attendance record, his ability to handle difficult situations without escalation, and his institutional knowledge of VIP dining procedures that had evolved over more than 2 decades. But Luis's greatest asset was his invisibility to the wealthy customers, whose dining expenses he processed daily. They saw him as a function rather than a person, someone who existed to facilitate their experience before disappearing back into the service infrastructure that made their lifestyle possible. This invisibility extended to casino security and management, who trusted Luis implicitly because he had never provided any reason for suspicion. The trust would prove catastrophically misplaced. Luis had spent 22 years learning every detail of the Bellagio's VIP dining operations, studying the flow of money through accounting systems, and identifying vulnerabilities that sophisticated oversight had missed. His patience and observation skills, combined with access that money couldn't buy, had prepared him for a crime that would redefine casino financial security. The Bellagio's VIP dining system was designed to provide maximum convenience for customers whose time was literally worth millions per hour and whose dining preferences extended far beyond the standard buffet offerings available to regular casino patrons. 31. Wealthy gamblers staying in presidential suites expected every aspect of their culinary experience to be managed seamlessly, from private chef services to elaborate catered events that could accommodate dozens of business associates. The financial infrastructure supporting VIP dining was necessarily complex, involving multiple departments and accounting systems that tracked everything from individual meal charges to large-scale catering events that could cost tens of thousands of dollars. The system was designed to provide detailed documentation for customers who might need expense records for tax purposes, while maintaining the speed and convenience that high rollers demanded. Central to this system were casino credit accounts that allowed wealthy customers to charge dining expenses directly to their overall gambling credit lines. A pharmaceutical executive celebrating FDA approval could order a $30,000 catered dinner for his business associates without handling cash or credit cards. The charges would simply be added to his casino account for settlement during checkout. For customers, this credit system provided ultimate convenience. For the casino, it generated enormous profits while creating detailed financial records that could track customer spending patterns and preferences. For Luis Ortega, it created opportunities that would eventually cost the Bellagio nearly $12 million. The vulnerability that Luis discovered lay in the gap between meal service and financial verification. During busy periods when VIP customers might be hosting multiple events simultaneously, the volume of transactions could overwhelm real-time verification procedures. Buffett's staff were trusted to batch enter charges accurately, with detailed auditing performed later by accounting personnel who rarely questioned charges that appeared consistent with customer spending patterns. More importantly, Luis realized that the casino's audit procedures focused primarily on detecting customer fraud, attempts to dispute legitimate charges, or claim unauthorized use of credit facilities. The system wasn't designed to detect systematic inflation of charges by trusted employees who had no direct access to cash, but could manipulate the accounting records that determined billing amounts. The insight that would eventually generate millions in stolen proceeds came during Luis's handling of a particularly elaborate VIP event in 2016. A tech billionaire had requested catered dining for 200 guests celebrating a successful IPO, with charges exceeding $50,000 for premium cuisine, rare wines, and specialized service staff. The complexity of billing such an event involved multiple departments and dozens of individual charge items, from food costs to service fees to premium beverage supplements. Luis realized that small adjustments to individual line items would be virtually impossible to detect during standard auditing procedures, especially when the total charges remained within expected ranges for such elaborate events. Over the following months, Luis began testing the limits of the system's oversight capabilities. He started with minimal adjustments, adding modest service fees or premium preparation charges to large catering bills. When these modifications went undetected, He gradually increased both the frequency and magnitude of his manipulations. The key to Luis's success was understanding customer psychology and spending patterns. VIP guests who routinely spent thousands on single meals rarely scrutinized itemized billing statements, especially when the total charges fell within their normal range of extravagant dining expenses. A petroleum executive accustomed to $10,000 dinners wouldn't question a bill for $12,000 if the additional charges were presented as legitimate premium services. Luis also discovered that the casino's accounting systems were designed for efficiency rather than detailed verification. As long as charges appeared consistent with known customer preferences and spending patterns, they were processed automatically without human review. The system trusted that Buffett cashiers would input accurate information, and Luis had built a reputation for 22 years of perfect reliability. Luis's theft methodology evolved over 3 years from opportunistic adjustments to systematic fraud that generated millions while remaining virtually invisible to casino oversight procedures. His success depended on understanding both the technical aspects of financial systems and the human psychology that governed how those systems were monitored and audited. The foundation of Luis's scheme was creating duplicate receipt systems that allowed him to maintain 2 sets of records: official casino documentation and shadow ledgers that tracked his actual manipulations. Using his access to office supplies and printing facilities, Luis created receipt books that were identical to official casino forms, but contained subtle differences that only he could identify. When processing VIP dining charges, Luis would use authentic receipts for small transactions that were likely to be scrutinized, but employed duplicate receipts for large transactions that were likely to be scrutinized forms for large catering events, where individual line items were less likely to be verified. The duplicate receipts allowed him to document inflated charges while maintaining official records that appeared completely legitimate. The inflation process was sophisticated and carefully calibrated to avoid triggering audit procedures. Luis would add premium service charges, special preparation fees, and exclusive ingredient supplements that sounded plausible, but represented pure profit for his criminal activities. A $4,800 catered dinner might become $6,500 on the final bill, with the additional charges disguised as legitimate premium services. Luis's method for converting these inflated charges to personal profit was brilliantly simple. Rather than attempting to access cash directly, which would have triggered immediate detection, he arranged for the excess charges to be credited as comped meals, complimentary dining provided to valued customers as a gesture of casino hospitality. The comped meal system was designed to provide casino management with discretionary tools for customer retention, allowing hosts and senior staff to offer dining credits that demonstrated appreciation for valuable patrons. Luis exploited this system by creating fictitious comp accounts that he could access through legitimate casino procedures. These comp credits were then converted to casino chips through established procedures that allowed employees to use dining benefits for recreational gambling. Luis would visit different cage windows throughout the casino, converting modest amounts of comp credits to chips while maintaining the appearance of a casual gambler enjoying employee benefits. The chips were subsequently converted to cash through normal casino cash-out procedures, with Luis spreading his transactions across multiple shifts and different personnel to avoid creating patterns that might attract attention. Over 3 years, this process allowed him to convert nearly $12 million in inflated dining charges to usable cash. Luis's genius lay in the gradual scaling of his operations. He began with $100 adjustments to large catering bills, amounts so small they disappeared into the normal variations of premium dining costs. As his confidence grew and oversight remained absent, he increased both the frequency and magnitude of his manipulations. During peak periods, major sporting events, holidays, or celebrity appearances, Luis would process dozens of inflated charges while accounting staff focused on managing the general chaos of increased customer activity. The busiest weekends, when auditors were most overwhelmed, became Luis's most profitable opportunities. By 2018, Luis was generating over $300,000 annually through his systematic manipulation of VIP dining charges. His lifestyle remained modest to avoid suspicion, but the stolen funds provided financial security that his legitimate salary could never achieve. He paid off debts, established savings accounts, and began making larger remittances to family members in Mexico. The psychological satisfaction of systematically stealing from wealthy customers who had treated him as invisible for over 2 decades, was perhaps as important as the financial gains. Every inflated charge represented a small redistribution of wealth from people who wouldn't notice $1,000 discrepancies to someone who had spent his career serving their extravagances while struggling financially. By 2019, Luis's confidence in his theft system had grown to the point where he was manipulating nearly every significant VIP dining transaction that passed through his station. The 3-year evolution from cautious experimentation to systematic fraud had generated over $11 million in stolen proceeds while maintaining perfect operational security. The volume of theft had necessitated more sophisticated methods for managing and concealing the stolen funds. Luis developed a complex system of shadow accounts, false documentation, and coordinated timing that allowed him to process hundreds of fraudulent charges while maintaining the appearance of legitimate casino operations. His most profitable innovation was exploiting the casino's special event catering services, which involved elaborate multi-day dining experiences for wealthy customers, hosting business conferences, family celebrations, or entertainment industry gatherings. These events generated bills that could exceed $50,000 and involved dozens of individual charge items that made detailed verification extremely difficult. Luis would identify upcoming special events through legitimate casino planning processes, then prepare enhanced billing schemes that could add thousands to the final charges through fictitious premium services, exclusive ingredient costs, and specialized preparation fees. The complexity of these events made detection virtually impossible, while the large sums involved generated substantial profits for relatively few transactions. The success of his special event manipulations led Luis to begin creating entirely fictitious dining events, elaborate catered affairs that existed only on paper, but generated substantial comp credits that could be converted to cash. These phantom events were documented through the same systems used for legitimate catering, making them indistinguishable from actual customer requests. Luis's creation of fictitious events required sophisticated coordination with casino scheduling and inventory systems. He would reserve private dining facilities during periods when they would legitimately be unoccupied, create customer accounts using variations of real high-roller names, and generate complete documentation for events that never occurred. The phantom events were Luis's masterpiece of criminal creativity, allowing him to generate hundreds of thousands in comp credits without any actual customer interaction or service provision. The events appeared in casino systems as legitimate business activities, while existing entirely within Luis's criminal imagination. By mid-2019, Luis was processing over $2 million annually in various forms of dining charge manipulation. His network of duplicate receipts, shadow accounts, and phantom events had created a criminal empire disguised as exceptional customer service for the casino's most valued patrons. But the scale of Luis's operations was beginning to strain the limits of what even sophisticated accounting systems could absorb without detection. The cumulative impact of 3 years of systematic fraud was creating patterns that careful analysis might eventually identify, threatening the operational security that had protected him throughout his criminal career. The discovery of Luis Ortega's massive fraud began with a routine audit procedure that revealed discrepancies too large to ignore or explain through normal operational variations. Janet Morrison, a senior auditor hired by the Bellagio to enhance financial oversight, noticed that Buffett revenues consistently exceeded what kitchen inventory and staffing costs should have generated. The initial discrepancy appeared modest. Buffet operations were reporting monthly revenues approximately 15% higher than mathematical models predicted based on ingredient costs, labor expenses, and historical profit margins. In most businesses, such variations might be attributed to operational efficiency or favorable cost negotiations with suppliers. But Morrison's experience with casino financial systems made her suspicious of any consistent pattern that couldn't be explained through documented operational changes. Her investigation began with comparing daily buffet revenues against kitchen inventory consumption, looking for periods when reported sales significantly exceeded the food actually prepared and served. The analysis revealed that discrepancies were largest during VIP catering events and special dining occasions that involved the most complex billing procedures. These high-value transactions were generating profit margins that seemed impossible given the actual costs of premium ingredients and specialized service staff. Morrison's investigation intensified when she discovered that many of the most profitable VIP dining events had been processed by the same cashier. Luis Ortega, whose 22 years of experience had made him the casino's most trusted buffet operation employee. The concentration of suspicious transactions around a single employee violated basic financial control principles. Surveillance review revealed Luis making frequent visits to accounting areas during off hours, ostensibly to complete paperwork for complex catering events, but actually accessing systems and documentation that his position didn't require. The pattern of after-hours activity correlated directly with the processing of the most suspicious billing transactions. More damaging was the discovery of Luis's duplicate receipt books hidden in his employee locker. The sophisticated forgeries demonstrated premeditation and systematic planning that transformed the investigation from audit discrepancy to criminal fraud case. FBI agents were contacted within hours of discovering the fraudulent documentation. Computer analysis revealed the full scope of Luis's criminal activities, with forensic accountants identifying over 3,000 individual instances of charge manipulation spanning nearly 3 years of systematic theft. The total theft amount exceeded $11.7 million, making it one of the largest employee fraud cases in Las Vegas gaming history. The investigation revealed Luis's sophisticated methods for converting stolen funds through the comp credit system, his creation of phantom dining events, and his careful timing of transactions to avoid detection by audit procedures. The complexity and duration of the fraud demonstrated criminal sophistication that exceeded typical employee theft cases. But when investigators moved to arrest Luis Ortega, they discovered that their primary suspect had vanished as completely as the money he had stolen over 3 years of patient criminal activity. On August 12, 2019, Luis Ortega worked his final shift at the Bellagio buffet. Security footage showed him calmly closing operations after 22 years of flawless service, with no sign he was hours away from vanishing with $11.7 million. By dawn, both Ortega and his Toyota Corolla were gone. His apartment was neat, his belongings removed, and his uniform folded in his locker, a symbolic farewell to his old life. Investigators quickly realized he had planned his escape for months. Financial records showed steady conversions of assets to cash and remittances to family in Mexico. 18 hours after clocking out, Ortega crossed the border legally in his own car. The Corolla was later abandoned near Hermosillo, stripped of clues. Analysts believe he switched transportation and vanished deeper into Mexico or beyond, aided by his ordinary appearance and common name. Despite FBI efforts across Latin America and parallel investigations by casino insurers, Ortega has never been found. 4 years later, he remains on the FBI's most wanted list, the stolen millions unrecovered.